Hi traders, welcome to another episode on the trades you missed last week. So on our previous episode, we were anticipating that price would tap into this fair value gap right here, because this fair value gap tapped into this fair value gap. So after this inducement right here, we were anticipating that price would do something like this, go up, tap into it, and come down. At Monday's opening, we could see that price actually created a fair value gap right here after tapping into this fair value gap that tapped into this other fair value gap here. So after price tapped into this fair value gap, it created for us a break of market structure. So this is our break of market structure right here, and a fair value gap. So on these spots, we should see an entry right here. So price would want to tap into this fair value gap and move bearish. So this is where we'll put our entry, at this one right here. So this is our entry here. We can put our entry here or at the other block, so we have more risk to reward ratio. So our stop loss will be right above this high that created that fair value gap, and our take profit will be here at this low right below the trade here. Why is our take profit here? Because we have a fair value gap right here. Price might tap into this fair value gap and rally up just like it did here. You see how price tapped into this fair value gap and wants to take us out. So you can take your profit here, or better still, take it here, because this is also a fair value gap. This is also a fair value gap right here, and it should have given you a risk to reward of 2.4 ratio. So our second trade will be the one we were also looking at the end of last week analysis. We were anticipating that price would tap into this fair value gap, rally to the downside, and also tap into a fair value gap right here and move to the upside. But there was a fair value gap here on our higher time frame, which is our, let's go to our 1 hour time frame. So on our 1 hour time frame, you can see that price actually tapped into a fair value gap here, which is also a very powerful fair value gap. Prior to this fair value gap being created, price tapped into this one here and created a break of market structure right here. Means that price is ready to go bullish. We anticipate price pulling downwards, then going to the upside. So this is where we will actually put our entry for a long position at the start of this fair value gap right here. Let's put it here, and our stop loss here. You can put your stop loss here, or the other block that created this fair value gap. So if you had put your stop loss here at this spot right here, let's give it a space to breathe. So we'll put it below the other block, and our entry is at this fair value gap right here. Our take profit should be here at this high right here, this high here, or this start of a new fair value gap right here. Or better, so you can actually take your profit here. This is a high that price is going to take out, so you can take your profit right here. This should be your second take profit, third take profit, and your fourth take profit. The last take profit would have given you a risk reward of 8.2, and you can see how price was going bullish throughout the whole week. So that will be our second trade. So let's move this one to the left, and without further ado, let's go to our third trade right here. On our 5 minutes, you can see a fair value gap right here. You can see a fair value gap right here. This is a fair value gap right here, and price tapped into this fair value gap here at first, but did not break this market structure, but broke this one here. You can see that price broke this one here, so this would have been a failed trade, because after price broke this structure here, we anticipate that it should go bullish, right? But because of this fair value gap right here, this is a very powerful fair value gap that made the markets actually go bearish. And now price taking this out to this fair value gap that has been created here, we anticipate a new break of market structure. So this is the third trade we're talking about. So this is a new break of market structure for our third trade, and we look for a fair value gap prior to that break of market structure. So this is our fair value gap right here. As you can see, this is our fair value gap on a discount zone. After price tapped into this fair value gap right here, it created a fair value gap that actually pushed upward to take out this previous high, creating for us a break of market structure. So if you want to take this trade, this should be your entry here, and your long position should be here at the start of that fair value gap, and your stop loss here below the high that created the fair value gap. So let's make it clean, take this one out, and you can see that you ought to take profits here at this high, or take profits here. This should have given you a risk reward of 4.1 ratio, and that would have been our third trade. And you see that price actually took this high here. If you had gone to this spot to take your profits, you would have gotten a risk reward of 6.78 ratio. So these are numbered because you might have taken this trade, so put your number down below on the comment section to know which trade you actually took. So this is the fourth trade right here. You can see a newly formed fair value gap right here, and this fair value gap actually was coming from this other fair value gap here. So this is a fair value gap right here, price respected, and price took out this inducement. Price took out that inducement, and you can see a break of market structure right here. This is a break of market structure. After price tapped into this fair value gap, price comes down, created a new low, which is our inducement, and price tapped into this fair value gap right here. So this would have been our entry, and even if you miss that entry, you would have seen another break of market structure right here, and you see a newly formed fair value gap at this spot here. This is a newly formed fair value gap if you had missed the first trade. So let's take this as our entry right here for a long position. So this is our entry, and our take profit should be below the low that created that fair value gap. So you have taken your profits here at this high, and your stop loss here. Your entry should be at the start of that fair value gap right here. So let's make our chart clean again by taking this one out. So this should have given you a risk reward of 3.1. Let's move on to our number 5, which is our fifth trade right here. This trade, you can see price hasn't filled this fair value gap up, so we can still use this trade to check if price can create another fair value gap and a break of market structure at this spot right here. So you can see how the movement is. Price tapped into this fair value gap. What you need to look for is your break of market structure here. The price take out any high. Well, price actually took out this high and closed above it, but it's not a fully formed break of market structure. But let's go down to our lower time frame, which is our 3 minutes. So on our 3-minute time frame, you can see that price actually did not close above this previous high, but just formed a wick here. But you can see a fair value gap formed at this spot. So this would have been entry. This would have been your entry from this start of this fair value gap down, because a fair value gap has been formed, break of market structure, and this would have been your entry for a 5th trade. So let's take our long position and enter here at this spot, and take your stop loss to this, below this low that created a fair value gap, and your entry here. Then your take profit should be at this spot right here. Why? Because this is beginning of a powerful fair value gap. So you can take your profits here, or take your profits at this high right here, this high right here, and this would have given you a risk reward of 3.68. So now let's go on to our 6th trade for last week. So moving on, you see our price goes bullish and now created a fair value gap here. This is a fair value gap you should be looking at. Now price wants to rally down. It's created a fair value gap at first. So after this fair value gap, we see that price wants to take out this previous high, but didn't, and respected this fair value gap right here. So after price respected this fair value gap, what we need to look for is a break of market structure and a fair value gap. Now what we have here is what we are actually looking for. You can see there was no break of market structure here, but there was a break of market structure right here. See how price wants to rally to the downside. Break of market structure right here, because price closed below this low right here, and a fair value gap. So now we draw our fair value gap from this previous high that created that fair value gap, and we take our entry for a short position right here at the start of this fair value gap. These are all our inducements, but if you had entered here, you would have taken your stop loss to this one that created the fair value gap, and taking your profits here below this previous low right here. Or you would have also taken your profits, probably your second take profit should be here, because this is a fair value gap, or your third take profit should be at this spot right here. And this all would have given you a risk reward of 5.09. This is a 5-point risk reward ratio for a short sale. Moving on, we have a bullish move, because we are on a bullish trend. There's a fair value gap right here that price is trying to respect on our 7th trade. So if you are taking your profits here prior to this fair value gap that was created, this would have been a 6.9 risk reward ratio, and another entry would have been here for a bullish move. And after price tapped into this fair value gap, what we need to look for, as always, is our break of market structure and a fair value gap prior to that. So this is our break of market structure that is fully formed, and you can see that price actually created a fair value gap at this spot. So you take it to the low that created that fair value gap, and you take your entry for a long position. So this is the start of the fair value gap, and you take your entry. So sometimes this entry might actually require that you wait for an inducement first. So this is an inducement, this one created here, a previous low that price wants to take out before a bullish move. So this is your inducement, and you might as well put your entry here. Immediately price takes out that previous low, and you take your stop loss to this low that created that fair value gap, and your entry should be here at this spot. Your take profits should be here at the beginning of this fair value gap right here, or better still, you can as well take your profit here, because there are no fair value gaps here, and this is liquidity that needs to be taken out. So you take your profits here. You have for yourself a risk to reward of 4.0 ratio. So we have it there as a bullish trade. So the next one is our 8th trade. So this is our 8th trade. By looking at this, we can see on our 3 minutes time frame we have a fair value gap here. This is our fair value gap here. So we draw a rectangle here and a breaker here. This is a breaker wick. So we have a fair value gap here, and we are anticipating that price should tap into it and give us a break of market structure. As you can see, there are no break of market structure here. Price did not take out this previous high here, but price did what? Took out this previous high at this spot here. Because price took out this previous high here, we can anticipate that when price is coming back, it might tap into this demand zone, this fair value gap area, and we take our entry at that spot because price has given us an inducement here. So this is an inducement. Price created a fair value gap, inducement, and your entry. After it created that break of market structure that tapped into a previous fair value gap. So you would have taken your entry here for a bullish trade, and a long position should be like this. Your entry here, your stop loss should be here. Your stop loss should be below this low that created this fair value gap right here. Let's take this out for a clean chart. So this is where your stop loss should be, here below this low. Alright, so let's take our stop loss here, and our entry is right here. And your take profit should be here above this candle fair value gap that has been created here. You can take your profit here or above this high. So that should give you a risk reward of 3.73 ratio. And you can see that market actually took out this previous high and rallied to the upside. So let's move on to our next trade, which is our 9th trade. So this is our number 9 trade, and looking at this number 9 trade, we go on to a higher time frame, and we are on the 30 minutes. So this is our number 9 trade, and we can see a fair value gap at this spot here. This is a fair value gap here. Drag the whole candle, and we are anticipating that price should tap into this fair value gap and create for us a break of market structure like always, and a newly formed fair value gap prior to that for our entry. So let's move on to our lower time frame to check what is going on here after price tapped into this fair value gap. So on our 5-minute time frame, you can see that price actually created for us a break of market structure. On a lower time frame, we would have seen a high here, like the 3-minute time frame, that price closed above and created for us a fair value gap right here. This is a fair value gap here. As you can see, this is a fair value gap right here, and prior to that fair value gap, price tapped into a fair value gap on our higher time frame. You cannot see the higher time frame fair value gap here because we are now on our lower time frame, and after price tapped into that fair value gap, a break of market structure was formed and a newly formed fair value gap here. This is where our fair value gap is, and we take our entry from this spot right here. Price actually created an inducement here. Price took that inducement, tapped into the fair value gap and rallied to the upside. So let's take our entry here. For a long position, we can tap into this and take our stop loss to this low and our entry here at the start of the fair value gap, and I'll take profit here. This take profits is our previous high, and we can see right here. This is our previous high right here, or you can as well put it here. This is your next take profit right here, and you would have seen a risk reward of 4.39 ratio. That would have been a good bullish trade on our 9th trade. So let's go on to our number 10. And if you took any of this trade, you can comment down below what number of trade did you take. So on number 10 trade, you can see a fair value gap at this spot right here. After price tapped into this fair value gap right here, it's tapped into this fair value gap and created for us a fair value gap, but did not close above this high. So this would have been a good break of market structure, but did not close above this high. Now it's closed above this high here, so we might as well use this fair value gap right here as our entry. Bear in mind we are on the 5-minute time frame, so this would have been a good entry after price created for us a break of market structure and a fair value gap. So let's take our entry from here for a long position right here, and our stop loss can be here or below this low right here, and our entry here. All these are inducements, and I'll take profits just right above this high and giving us a 2.29 risk to reward ratio. So let's move on to our next trade. So this next trade right here will be going to our higher time frame, like the 1 hour time frame. All right, so on our higher time frame, like the 1 hour time frame, we can see how price tapped into this fair value gap right here. So that's why this rectangle is here. So I try to highlight this fair value gap right here, and you can see how price tapped into this fair value gap. And remember, we are on a bullish trend, so price tapped into this fair value gap right here, and what we need to look for is a break of market structure and a newly formed fair value gap. So we have our fair value gap right here again. So we'll be anticipating Monday we might see a bullish trade. Take our entry here and for a long position to these spots. So for a long position to this spot right here, so take our stop loss to this one that created the fair value gap, and well, we have to move back to our previous high to check if there are places we can actually set our take profits. So that will be an assignment for you guys. So you can check this out and see how price tapped into this fair value gap and rally to the upside. So we move on to our 15 minutes time frame to check what is going on. So we are actually anticipating a bullish move, a move to the upside. So if there's an inducement here, we can use that as our liquidity pool for that. Then we get something like this. Then our entry to the upside. So this will be our entry here. Our take profit is up to us. Well, let's go on to our daily time frame to check it out. So on our daily time frame, you can see there was a supply here. So this supply is actually powerful because you can see a fair value gap right here on our daily time frame, and daily time frame are actually powerful than lower time frames. So these are fair value gap and an order block here. So this is very powerful for a sell. So this trade, we need to be careful because price might actually rally to the downside. Well, because we're on a bullish trend, and we might see a rally to the upside following a respect to a fair value gap on that lower time frame, on our 1 hour time frame. So that is why this is actually here. So let's go back to our 1 hour time frame. If price actually respects that daily fair value gap and order block, then we might as well push to the downside like this and wait for a setup that can take us down for next week. And if not, we continue moving bullish to the upside. So let's go back to our chart and check this trade out. See you guys on the next episode. Peace.